Hey guys, how's it going? Value Venture Investing here today. So what an interesting quarter for Apple. And it's not because of these numbers, it's not because of what's happening with the stock. It's because Apple's going to be doing something a little bit differently now that might change the way we think about Apple's earnings, the stock as a whole, forever. I mean, it might even drastically change the share price. I'm very excited to see what's going to happen with this. Stay tuned. I'm going to talk about that at the end. But let's talk about Apple right now. So we're looking at a chart here. It's getting hammered after hours here. As of recording this video, we're down about 6.7-ish%, somewhere around there. And the main reason for that is going to be the iPhone unit sales. This is what analysts are always so focused on. So we still had a phenomenal quarter. For a quarter that's not that important, the next quarter that's going to be very important is going to be Q1 of next year. Of course, we're in Q4 right now. This was what was just released. So there was an estimate of 48.4 million. We had 46. So, a significant mess there, and that's what's driving down the stock. But what's kind of strange about it is that because of how Apple's mixed, they're driving revenue from different areas, timing and different things like that. It's created a lot of record earnings for Apple. But a lot of analysts, all investors seem to be focused on this. So even though they're selling less, their average selling price is $793. So that's, the average selling price for phone, because some of them are more cheaper, some of them are more expensive. And year over year, it was 618. So we've seen that come up significantly, which we knew it was going to happen, right? I mentioned in my last video that I think that the XS is going to be one that sells a lot, right? So that's going to drive up the ASPs. And you're seeing Apple kind of migrate to this strategy as much more that if they're not selling as many units, well, they're going to have a higher margin on the units. So revenue was 62.9 billion. So that's up 20% year over year. And that's up over 10 billion. Like, any company would be so incredibly happy to have these kinds of earnings, right? And this isn't even a significant quarter, like I said. So, 3 months time, almost $63 billion in revenue. Net income was $14 billion, up 32%. And of course, EPS, which I'm very interested in, was a huge beat. I mean, a lot of this has to do with them buying back shares, right? That significantly boosts EPS. But EPS is based on profitability too, right? So it was $2.91 per share, and the estimate was $2.78. So that's a pretty significant beat there. So I like that. So going into a little bit more of some of the particulars, like how much iPhone revenue is up, paid subscriptions, stuff like that. So year over year, iPhone revenue was up 29%. So, you can see that in the ASPs here, right? Even though unit sales were a little bit shy of expectations, we actually saw the revenue grow by almost 30%. This is a huge one too. I keep talking about this health with Apple services. Their services division is what is going to be driving them. We'll get to services in a bit, but we have 330 million paid services, right, as of Q4. That's up over 50% year over year. So a paid service would probably be something like Apple Care, Apple Music. Those types of things are getting pretty big. The other category, so that's wearables like the Apple Watch, home, accessories. It grew by $1 billion year over year. Now, I haven't had a chance to look through their financials yet. I did that on another video for the last quarter, but that's massive, right? And it pales in comparison to what they're making on the iPhones, but it just shows you Apple's ability to migrate and to make money off different things. My favorite one is services. This is another disappointment, but in my mind, it's kind of like, so what? It was $9.98 billion in 3 months for services, but the estimate was $10 billion. So this was like a huge miss on Wall Street's expectations there. It's up 27%. So we're still seeing this accelerating growth of services, but Wall Street's still not happy because they're seeing the numbers be a little bit shy of the estimates, right? So this was another soft spot. This is a huge one, right? Okay, so the guidance for Q1 of next year is around $89 to $93 billion in 3 months. That's insane. That's phenomenal. But again, the estimate was 92.74. So they're guiding, potentially a little bit lower than that. So what is kind of interesting that a lot of people don't know is that's approximately 3% growth is what we're looking at. And that actually breaks 4 or 5 quarters of consecutive significant growth. So some investors might be looking at that and being a little scared about that. But some of the reasons for that, of course, we talked about in some of the other videos, is geopolitical risk, right? All the uncertainties with that, but I think that those are going to turn out to be just fine in the long run. Another one is the supply chain constraints. They're talking about they have so many new product mixes, which they do. We have a lot of new things that have come out, like the iPad was just yesterday, it had an event. Looks amazing. Like, this is going to be another driver. Let me diverge into this a little bit here. This is going to be another driver for Apple stock, because iPad growth has been, pitiful, because they've been getting faster. They're super fast. Yeah, they're super fast, but they kind of kept the same form factor for quite some time, right? This one is all screen. It's ridiculously fast. It's. I think they gave a number in their presentation yesterday that it's faster than like 95% of tablet or laptop computers that are shipped by their manufacturers. So they did that. They also released some Macs, which weren't significant, but a lot of things that people were actually waiting for. So because of that, their supply chain, they're a little bit worried about the timing. They're always worried about the timing, which I can see being an issue, and people are very myopic thinking. They're they're short-sighted thinking. So they're worried about the timing of that. And yeah, so that's basically it. I mean, there's also foreign transactions that they're a little concerned about, because the American dollar is basically appreciated against a lot of other currencies. So that they were saying, the CFO in the presentation today was saying that that's about $2 billion right there of foreign exchange headwinds that were coming in. Right, so as a whole, I see it as a good thing. Like, I see it as a great quarter. But there is one thing, and I'm going to grab this right now. There's one thing that they said at the end, which I don't know how to feel about it. I'd love to know your guys' opinion on this if you want to leave a comment down below. I understand both sides of this. Okay, so the first one that isn't that significant is they're saying wearables. Wearables, the home kit, not home kit, but the home pod, accessories, it's now going to be called something different. I believe it's going to be called it's just going to be called wearables or something like that. So that's not really significant. But this was the big one. So they're saying going forward, they're not going to report iPhone, iPad, or Mac unit sales, as it does not show much relevance, timing, or the breadth of their portfolio. Now, what did we just see today? I can see why they're doing it, right? So you're no longer going to see these iPhone unit sales. You're just going to see, well, we had revenue, record net income, record EPS, and there's not going to be that ability to dive down and see exactly where it's coming from. So it's good, because it's, they're talking, the CEO, Tim Cook, was talking about it, the CFO was talking about this as well. They made an analogy that, when you're going shopping and you bring a grocery cart up to the front, the clerk doesn't say, well, how many units do you have in there? It doesn't matter. What matters is the value of what's going to cost, right? So in terms of Apple, what it's worth, what they're driving, how they're growing. But I can see the other side of the argument where it's like, well, then we have no idea how to project out in the future, because we don't know how much is really coming from the iPhone, how much, services, I guess they'll still be breaking down their services, but how much services is contributing to it, the different mix, right? It gives you a better idea of what the company's doing, the potential risks that are ahead, right? So I'm very mixed on it, because I think it could be something that really helps a stock, because you're just going to see record after record after record. But I feel like investors are going to take this as a really bad sign. And when this news came out, it's like the stock after hours started dropping even more. So I just don't know how this is going to be digested. I don't know how many people even know about this right now as of me recording this. I feel like this is just something that basically just came out. I just listened to it, and I don't know how this is going to affect the stock. I like it and I don't like it. Really like to know what you guys think about that. As you can tell, it's just kind of blowing me away. I'm just like, this is very strange. It almost sounds devious in a way, but it's good in another way, because look, what they're saying is true. It isn't really representative of the company. It doesn't matter. This doesn't matter. They're still selling, massive amount of iPhones, but the stock's getting hammered because of what analysts are expecting, right? That's kind of stupid. So be interesting to see how it responds. Overall, I think it was a great quarter. It's not really significantly important as is the over the holiday quarter, so I'll be very interested to see that one. But we'll see what happens with the stock tomorrow. Hopefully, investors get to digest this, and we don't see it keep pulling back like a lot of the stocks in the market. So that's gonna be it for today, guys, and I'll see you in the next one.